Hey, today I'm going to try to learn how to trade stocks, commodities, forex, cryptocurrencies, you name it. I'm a total beginner and never traded before, so if you want to see if I'm able to figure this stuff out, stay tuned. Since quite some time now, I'm fascinated by a thing called technical analysis, or more specifically, price action trading. We all heard of it or seen it on TV, probably on CNBC or some other business news channel, a guy talking about a specific stock or commodity. Next, he's pulling out this chart and drawing some seemingly random lines on it, making predictions of future price movements and talking some gibberish that sounds kind of impressive, but where we have really no idea what it means. So, as I'm a very curious person by nature, I started to read more about it. Bought a book or two, went through countless YouTube videos, and even took an online class in order to see if this makes any sense to me and if this could be something that could earn me some real money. So I thought, before I move my hard-earned cash into some of those trading opportunities, I'll make a video series of me trying to explain these techniques and applying them to the real world using a paper trading account. What is a paper trading account? Well, it's basically a trading account using fake money. So you can try stuff out without the risk of losing it all. Making these videos will help me better understand what I'm doing, see mistakes I make, and hopefully getting some feedback from some of you who already have had success in the trading sphere. So I can get better and maybe we can even learn from each other. If, on the other hand, this is as new to you as it is to me, just follow along and we can learn this stuff together. This is by no means financial advice. I'm just an idiot trying to figure this out and basically recording this for myself for future reference. Some kind of trading diary, if you will. I'm trying to make these videos on a regular basis, analyzing at least one stock, commodity, or crypto in each video. Today I'm going to try to explain what I have learned so far about the basics of technical analysis and price action trading in specific, starting with the why. Why price action trading? Price action trading is a method of technical analysis that relies on analyzing price data to make trading decisions. Sounds easy. The advantage of price action trading is that it can be used on basically all tradable assets, whether that be stocks, forex, commodities, or cryptocurrencies. It doesn't matter, as the only focus is on price action. It also works on any time frame, whether that be the monthly or down to the 5-minute time frame. It doesn't matter. It's a versatile approach that can be used to trade a wide variety of market conditions. The key principle is that all relevant information is reflected in price. This means that there is basically no or very limited use of indicators or fundamental analysis. Instead, there is a heavy reliance on past price data. It's a very reactive approach that focuses on identifying and trading mostly market reversals or breakouts. You look for patterns in price data that can be used to anticipate where the market is likely to turn. Before we go into the details of the technical analysis and price action, it's important to mention the basic chart tool that we're going to use throughout this video, and it's called TradingView. It's a free tool. There are paid plans, but we are going to use the free version of it, which is more than enough for our use case. You can either download the software or use the web version of it. That's up to you. I'll leave a link in the description down below for your reference. So let's hop over to tradingview.com forexstrading.com. In order to sign up for a free account, just hop over to the sign in symbol here, and here on the bottom is a sign up link. Just click on it. You can sign up however you want. I use my email for it. Just put in your details, and once you've done, we come back. Once you signed up and you are logged in, it's probably going to look something like this here. What I always do is I switch. Here is your profile and stuff. I always switch to dark color theme. It's more easy on the eyes, at least for me, and that looks already much better. Right, so apart from the watch list, we have some details as we select the symbol here at the top, the S&P 500. There will pop up some details, price, and the daily range, the weekly, monthly, yearly performance, some technical indicators. All this is not very important. I'll just block this here. And not really important to us at the moment. What we're going to do, let's hop over to the S&P 500. We can click here. And this brings us to the S&P 500 E-mini futures site, where we have a basic chart over here and some information down below regarding news and ideas, basically the same stuff that we saw here at the right side. But what is really important to us is the advanced chart. So if we click on here, we're going to get to the advanced chart, and this is where we are going to draw all the random lines, right? So just a quick overview. We are going to go into more detail later, or maybe in another video. And just a quick overview right now. Here at the top left corner, we do have our profile settings and the display settings here, dark mode, and so on. Here is the symbol search. Here you can search for all kind of crypto, forex, indices, stocks, you name it. You just search here and it's going to show up. Right next to it, we have the compare or add symbol button. If you click here and you want to compare your current chart with another one, in this case, let's compare it with the NASDAQ. And here we can have a performance comparison and see also here percentage-wise how they differ from, in this case here, July 2013 to today. There's quite a difference between those two. Here next to it we have the time frames. This may look a bit different to you because I already added some time frames as favorites. If they don't appear as they do here, just click on this little arrow, and you're going to have all the time frames presented to you. And starting with the monthly and weekly, daily, and so on. We can change that here. We're at the monthly right now, and let's get rid of this comparison for now. So we can go to the weekly here, and you see this is changing instantly. And right next to it we have the candles. So there are all different kind of candles or lines. So this is just a different representation of the price. There are hollow candles and even bars and a line chart, right? But we are going to stick with the default candle chart. And yeah, next to it are the different indicators. If you click on it, you can search for those. For example, the RSI indicator. There are different here, a relative strength index, right? You can add those. There is a limit in the free plan. You can add a maximum of 3 indicators. And yeah, you can close that here. And if you want to make them disappear, you have the option here down below. And what else? There are indicator templates. There are alerts that you can set. Bar replay and undo or remove if you have drawn something. And that brings us here to the left bar, and this is the drawing bar. And here you can draw, as I said, random lines. Just click on it here, delete, right? You have here a trend line, arrow, and yeah, you can play around with those. It's fun to do, and just a horizontal line. If you just click on it and it draws a horizontal line. Here, if you want to draw something on the chart, you can do that too. And you can write text. You can draw some symbols, like right arrows. You can measure. Here you can measure stuff, zoom in, a magnet. So there's a lot of stuff. We will, as I said, we're going to go into more detail later when we are really using this this tool. And yeah, that's it for now. As I said, play around with it, get comfortable with it, and yeah, cool. So now that we have taken a look at tradingview.com, let's have a look at the basic candlestick patterns that are out there. First of all, what is a candlestick? A candlestick is a visual representation of price and displays the high, low, and closing prices of a security or commodity for a specific time frame. There's a green candle that represents price going up, and a red candle which represents price going down. Both candles have a body and can have an upper and lower wick. The opening price on the green candle starts at the bottom of the candle's body here, and the closing price is here at the top of the candle's body. The highest price during this time frame, let's say this is a daily candle, is on the top of the upper wick, and the lowest price during this time frame is at the bottom of the lower wick. Right? Regarding opening and closing price, the opposite is true for the red candle. The opening price starts here and the closing price down here. Again, highest price is reflected here at the top of the upper wick and the lowest price down here below. One important thing to mention is that one candlestick on its own doesn't tell you really where price is likely to go, right? But a candle pattern in combination with key areas of support and resistance can give you a pretty good idea. Now let's take a look at some basic candlestick patterns. Here we have a shrinking candlestick pattern in an uptrend. This means that there are 3 or more candles that are continuously shrinking and where each candle is smaller than the previous one. In an uptrend, this shows a loss of momentum where buyers are less and less in control. And if close to a key resistance level, like here, it can be an indicator of a potential reversal to the downside. Here on the right side, we have the same pattern, but in bearish. Again, this is a downtrend and each candle is smaller than the previous one. And if combined or near a area of key support, this can be also an indicator for potential trend reversal. Next, we have a growing candlestick pattern. This pattern shows 3 or more candlesticks where each one is bigger than the previous one, the exact opposite of the shrinking candle pattern. And here, building after a downtrend and coming from a key resistance level here, this can be seen as a trend reversal confirmation. If, on the other hand, this candle formation forms after an uptrend at a key resistance level, this can be seen as a reversal confirmation pattern to the downside. Here we have the doji candle, and the doji candle has a very small body, as we can observe here, and it shows us that the opening and closing price are basically identical. And depending on the length of the wicks, we can see how much buyers and sellers were fighting for the price, which eventually ended up in a draw, right? So we have the opening price here and the closing price basically at the same level. And in the meantime, buyers and sellers were fighting. It represents an indecision of where price should go and is often an indicator for a reversal as the momentum has been lost, as here in an uptrend, right? Combined with a key resistance level. And this can be an indicator for a reversal. Here is the doji candle, a bullish doji candle, which can form here on a key support level. And coming from a downtrend is exactly the same, an indecision in price between buyers and sellers, a loss of momentum, and can be a possible sign for a reversal. Next, we have a momentum candle, but this bar here in particular is the exact opposite of the doji bar, where you have a very long candle with no wicks. And yeah, here in this case, they represent a momentum candle. And if they are coming from an uptrend and forming at a key resistance level, this would be an indicator for a possible trend change, as there's a lot of momentum to the downside here. Here we have after a downtrend, we have this bullish momentum candle forming, and this is, if forming at a key resistance level, also an indicator for a possible trend change. The hanging man. The hanging man is a bearish candlestick pattern that forms at the end of an uptrend. The pattern is created when open, high, and close are roughly equal, right? This is open, close, and the high. And the low of the day is significantly lower than the other 3 price points. The long lower wick indicates the sellers were able to push prices lower, but buyers were able to step in and push prices back up to close near the highs. The hanging man is a bearish reversal pattern, and it should be treated as such. While it can be a powerful signal it is best used in conjunction with other technical indicators to confirm reversal. The hammer. The hammer is basically the same candle as the hanging man, with the difference that it forms at the end of a downtrend and indicates a possible bullish reversal. Here we have two engulfing candle patterns. The first one is a bearish one and the second one here is a bullish one. And the bullish engulfing candle pattern is a two-stick candle pattern that is used to signal a potential reversal in a market. The first candlestick is typically a small bearish candlestick, this one here, and the second one is a large bullish one. And it's called an engulfing candle because this bullish candle is engulfing the previous bearish candle's body completely. Right? The bearish engulfing pattern is opposite of the bullish one. The bearish one is also a two candlestick pattern that is used to signal a potential reversal as well. And the first candlestick in the pattern is typically a small bullish candlestick, and the second one in the pattern is a large bearish one. That completely, here again, it completely engulfs the previous bullish candle's body. Yep, up to the next one. This one is a candle pattern with multiple long wicks, and it shows a reaction to a certain price level. Those are basically multiple failed attempts to break through this price level, this key resistance level. It came near close here, it touched here, temporarily got through here and here as well. So this means that there is a reaction to this price level and can be a great indicator for a reversal. Here on the support level, the same, there are several long wick candles forming and which failed to break through this level, and here again can be a great indicator for a reversal. Again, one candlestick on its own doesn't tell you really where prices are likely to go, but a candlestick pattern in combination with key areas of support and resistance can give you a pretty good idea. Well, I think this is it regarding basic candlestick patterns. There are of course more patterns, but I think I've touched on the most basic ones. If you think I've missed something essential, or if I've got something completely wrong, please let me know in the comments down below. It's much appreciated. Thanks. Here's a fun fact regarding candle charts, and apparently those candle charts were used hundreds of years before becoming popular in the West by Japanese rice merchants and traders to track market prices and daily momentum. Wow. So let's have a look at support and resistance. In trading, support and resistance are key areas where price is likely to find support or resistance. Sounds obvious, but let's have a look at the chart. Let's go over to TradingView, and for this example, let's go to the USD yen pair. Let's go to the monthly time frame. And this is also something I've learned. The higher the time frame, the more weight it has. So let's always start with a monthly time frame in order to see where is the trend or where are obvious support and resistance areas, right? So let's go to the USD yen chart, and let's make sure we have the auto toggled and the log scale on, right? And let's just zoom out to see if we see obvious areas. we can see this goes back to the 1970s, which is a lot of data, right? We probably won't need all this data. We are looking for an area where price was rejected several times in the past, right? Whether that be here in a resistance area or at the support area. And there should be at least 2 touch points, right? So I think that we could make out this area, right, as a resistance area. Let's zoom in a bit. Let's just try to draw that in here. Let's maybe give it another color. So red for the monthly and a lighter color maybe for the weekly, daily, and so on. But it is important, as I said, that we start with the monthly to see obvious price levels. And if we zoom a little bit in, so what we have here is an area where price touches here 2 times in the 90s and just recently, right? So we can probably take this area here as the main resistance area on the monthly chart. And let's see if we can figure out another support level. Let's try to zoom out a bit. Right, so we could maybe make this one here out, this line here, which is actually at a current price level, because we have here, here, and here touch points. So let's draw that area in again with the rectangle tool. And let's start over here, because that would be our first touch point here. Second one. Right. And let's zoom in a bit. Let's bring this up here. Now, if we go a bit further, let's draw this a bit down, just adjusting it in order to have these touch points. And I think that probably looks good. So that would be an area, a second support area, a second resistance area, I'm sorry. And now let's try to find another one. Another obvious level, I think, would be this one here around 125. Right, because we had here, it acted as support. Here again, a support. Here, resistance, 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 resistance. Here too, let's go a bit lower. Right, so this would be another obvious resistance area. Let's just make this. What we are looking for is an area where price got rejected several times, right? So we have this here with 1, 2, 3, 4, let's say almost 5 rejection points. Then we have this other support level here, which is also quite broad. I think that's okay. I'm not quite sure. But I would say, yeah, this here is this area between 142 and 134, because we had here rejection point. Here we went into this area. Here another. Here. Let's see if we can find another resistance level. Something more recent. It's this here probably. Let's draw again. It's probably a bit narrower. Let's track this out here. So this, because we have here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So there are more than 12 touch points where we had rejections. And let's see if we can find another resistance level. Well, I think for now that looks good. And now let's try to find a support level. I think the obvious area would be the all-time low, right? So we have already here several months where price got rejected at this price area here. So let's just draw let's just draw this area in. This area here. We could go even, I think, I'm not sure if that's too broad, but we could go even up here and have this broader area here from 78 to 75, which would be key support, right? It never went lower than that. So that would be our key support area here down below. And another obvious area, I think, is this one here, right? So let's see how far that goes back. I think that's it around here, right? So let's take the rectangle tool again, and let's try to draw this in here. And let's zoom in to refine this a bit. Yeah, I don't know, more or less probably. Let's see if we can bring this up a bit more around here. So this is a very strong support area because we had here an entry point. This acted as a support. We broke through here, but it acted here as resistance. Then we break through here. We came back down, support, 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 another support. We broke through, it acted as resistance, right? Here again, a rejection, resistance, and support, support, and support. So if there's a price area which acted both as support and resistance, this is a very strong price area, right? So now it's acting as support, as we have seen here back in 2020. And yeah, since then we went basically straight up here. Okay, so another area I think would be this one here. So we had here rejection, 1, 2, 3 rejections here. And here it acted as a resistance level. We had here several entries into that area that got rejected. And again, here, right? So I think, I'm not quite sure if I drew these areas too broad, right? But I think that looks okay, right? If you agree, just or not agree, or if you have suggestions, let me know in the comments down below. As always, feedback is highly appreciated. Okay, So I think we get the gist. Key areas, key support and resistance areas where price got several times rejected. And yeah, let's see if we can draw here another, if we can draw in here another support area. Not sure, maybe this here. That would be another one. Right, so that's the monthly. Then we could go down to the weekly chart and see if we can refine this or if we see another support and resistance area which wasn't obvious on the monthly. Right, maybe here also. That would be an area where we could draw in. Let's change the color maybe so we can differentiate between the monthly and the weekly. Let's take the orange, for example. So this would be a more recent resistance level, right? Because we had here, or a key support area or resistance area, because we had here 1, 2, 3, 4 times it acted as resistance. Here another time, here it broke through and acted as support, right? So that would be another area. So let's go down to the daily to see if we can find another support area on the daily chart. So this area maybe here. Right? Something like that. And also let's change the color here. So we know now yellow is daily, orange is weekly, red is monthly. So here we can see there are several rejections at this price level. 1, 2, 3, 4, 5. Right, then we went down to this area which acted as support. We broke through this area and this area acted as support here. 1, 2, 3, 4, 5 candles that got rejected at this price level. Right? So again, I'm not quite sure if I draw these areas too broad, right? But it's a good thing to have the different colors that we know that this area here is a monthly area. And as I said, weekly orange, daily is yellow. So we know how to differentiate and how to value these levels as well. Let's see if we can have if there's another area, maybe here. Right, inside of this monthly, we can maybe draw something like this. Right, because we had a rejection here and a rejection here. And then maybe here. This could be another area because we got price rejections here and here as support. Right, so I think we could go even lower to the intraday time frame and the 4-hourly, which makes it more obvious, right? These rejections are more obvious now. We see here lots of rejections. Here also, if we go down to the hourly, right? We could adjust these areas, but I think that looks okay. Okay, so let me know what you think. Comment below. So, yeah, I think that's it. That's it for support and resistance. Key takeaways are that support and resistance are very important levels because they can help us to identify areas where price is likely to reverse or continue in its current direction. They are an important part of the technical analysis when making trading decisions. The most important thing to remember is that they are not exact price levels, but rather areas where the price is likely to find support or resistance. And once price breaks through a certain level, a support level, this support usually comes resistance, and vice versa. When price breaks through resistance, this becomes likely support. Well, I hope this was helpful. I hope that these areas are drawn in correctly. If not, let me know in the comments down below. As I said, we are all here to learn, me especially, and I take all the help I can get. Well, thank you very much, and let's go to the next lesson. So, next up are trend lines. What is a trend line? Well, a trend line is a straight line that connects two or more points on a chart in order to identify a trend. So let's go back to our chart where we already drew in support and resistance areas. And let's try to get rid of those just for the moment. If you go here to this tab, object to the object tree, right? You can hide basically everything you don't want to be shown, and later you just toggle this and it shows up on the chart again, right? But just now, in order to have a clean sheet, let's hide those. Right, so let's zoom out here again, make sure we are here on the monthly. And in general, what we can see here is there was a general downtrend, right? From the 70s, here at the highest point at 355, and to the lowest point in 2011 at 73. So let's draw this line here. Let's see if we can make out a trend line. Right, I think. Right. So we see we have here 1, 2, 3, 4, 5, 6, 7, 8 touch points. So this would be a general downtrend, right? So that's a trend line. When we have a market in a downtrend, the line is drawn above the price action to connect the highs, right? This is called the resistance trend line. So we had here a general downtrend with several price rejections, right? But here we had a breakout, right? So this is a novice breakout here in March 21, right? But here a general downtrend. If we zoom in, we can see here several other downtrends inside of the major downtrend, right? Because this would be one, right? We have here 1, 2, 3 areas that acted here as resistance, and here as support as well, right? Or here as well as resistance, here as support. And this is a trend line. Let's check here an uptrend. When the market is as here in an uptrend, the trend line is drawn below the price action to connect the lows, and this line is called the support trend line. Let's make this here. If we go to this, right, this would be a trend line, because we have here the low and here multiple rejections, and this is quite a steep uptrend, right? As well as here, something like that maybe, right? Here 1, 2, 3, 4, 5 touch points. Here would have again a downtrend, right? So yeah, those are trend lines. And if we zoom in, if we go to the weekly, right, we have here an uptrend. Well, let's try to connect those here. Something like that, right? Let's go down to the daily, and we can see here, this is more granular. We have a downtrend here inside this general uptrend, here as well, an uptrend here, another one here, this one here, right? So it's important that it's not perfectly drawn, right? Because we have here some breakouts, but in general, this is an uptrend, and we have here multiple areas where the price got rejected, right? If we would have drawn this line only based here on those 2 or 3 touch points, right, we would have seen here several future rejections. And yeah, here another one, right, like this, or like this, several touch points here. And you can go even down to the intraday time frame, and you will find a lot of areas where you can draw trend lines in, right? So this is it for trend lines. I think that you get the gist here as well. And yeah, let's go back to the presentation. Some key areas or some key takeaways. A trend line is a straight line that connects 2 or more price points on a chart. Trend lines are used to identify the direction of a market, as well as support and resistance levels. When a market is in an uptrend, the trend line is drawn below price action. In a downtrend, the trend line is drawn above price action. And a steeper trend line indicates a stronger trend, and a shallower trend line indicates a weaker trend. Trend lines can be used in all time frames, from intraday charts to weekly and monthly charts. They can also be used on different types of charts, such as bar charts, candlestick charts, and yeah, point and figure charts, you name it. Yeah, that's it for the trend lines. And let's hop over to the next lesson, to chart patterns. Yeah, let's talk about basic chart patterns. Basically, there are 3 groups of chart patterns. Continuation chart patterns, reversal chart patterns, and bilateral chart patterns. Right? Continuation chart patterns occur when the price is continuing the same direction as the trend. Reversal patterns occur when the price is changing direction and the trend is reversing. And bilateral patterns can occur when price goes in either direction and indicate a period of consolidation. Yeah, let's have a look at the most common continuation chart patterns. As mentioned before, continuation chart patterns are an indicator for a trend continuation. So we have the trend here, and we insert basically the continuation chart pattern here, and the trend continues. First up, we have the ascending triangle in an uptrend. Here we are coming from an uptrend. We get rejection here at this price level and coming down, making higher lows, but not higher highs, right? And eventually break through and continue with our uptrend here. The same here with the ascending triangle in a downtrend. We have this downwards movement, got the rejection here at this price level and making higher lows, but got rejected here. And yeah, eventually breaking through this area and continue our downtrend. Next is the descending triangle in an uptrend. Here again, we are making, we got rejections at these price levels and making lower highs, but not lower lows, and breaking through this price area and continue with the uptrend. The descending triangle here in a downtrend, the same. We're making lower highs and having here this support area, but are breaking through and continuing with the downtrend. Here the ascending channel, again here coming from a downtrend, having rejections here in this channel in between those two price levels, which are forming a channel. And yeah, this is an area of consolidation before breaking down and continuing with this downtrend. And the opposite for the descending channel here, coming from an uptrend, rejections here at the top and at the bottom, forming this channel and having this consolidation phase where we eventually break out and continue with our uptrend. Here the horizontal channel, again, coming from an uptrend, consolidation phase, forming a channel and continuing with the uptrend. The same here, but only coming from a downtrend, rejection here at this price level, rejection here, forming a channel and eventually continuing the bearish movement. Here we have the symmetrical triangle. Again, here consolidation phase coming from an uptrend with the continuation. And here from a downtrend, consolidation, making lower highs, higher lows, hence the symmetrical triangle and breaking out to the downside here. Now let's have a look at the reversal chart patterns. It's, as the name suggests, a pattern that indicates a trend reversal. Here we have the trend. We insert the reversal pattern here and the trend reverses like magic. One of the most common ones would be the double bottom. Here we are coming from a downtrend, get a rejection at this price level, coming back up, coming back down, get another rejection, are failing to make a lower low, and once we break this neckline here, the trend reversal is confirmed. Here the opposite with the double top. We are coming from an uptrend, get a rejection at this price level here, coming back down, another rejection here, fail to make a higher high, and once we cross this neckline here to the downside, the trend reversal is confirmed. The triple bottom, basically the same, but with an additional rejection. Instead of 2, we have 1, 2, 3 rejections here. Coming from a downtrend, we got a rejection, going up, another rejection, going up, another rejection, failed 2 times to make a lower low, and once we break this neckline to the upside, the trend reversal is confirmed. Same here, but the opposite, the triple top. We're coming from an uptrend, getting a rejection here, coming back down, another rejection here, coming down, a third rejection. In both cases, we haven't made a higher high, coming back down in price, are breaking this neckline here, this price level, and confirming the trend reversal. The head and shoulders, here we coming from an uptrend, get a rejection here at this price level, are making a higher high, which is a bullish, a signal, but then coming back down to the same price level here and building a neckline, we are not making a higher low, which is a bearish sign. We get a rejection and are failing to make a higher high. And once we are breaking this neckline here to the downside, the trend reversal is confirmed. The inverse head and shoulders pattern is the opposite. And in this case, we are coming from a downtrend, getting a rejection at this price level, and here as well, making a lower low, which is a bearish sign, but then getting a strong rejection at this price point here, coming back to the same price level of the previous rejection and building a neckline. Here we are failing to make a lower low. And once we are breaking this neckline here to the upside, right, we have a trend reversal confirmation. Next, we have the bilateral chart patterns. And in this case, we have a trend, and this bilateral pattern can indicate both trend continuation or a trend reversal, depending on the situation. Let's have a look at those patterns. One bilateral pattern would be the symmetrical triangle. Here in an uptrend, coming from an uptrend, we have this consolidation phase, and the most likely outcome is if you're coming from an uptrend that the breakout would be to the upside, but it could go also to the downside. Here in a downtrend, the exact same thing. The most probable thing would be a breakout to the downside and continuing with the trend, but it could go also the other way to the upside. The ascending triangle is another bilateral chart pattern. Here coming from an uptrend, consolidation phase, most likely continuing, but it could go also down in the other direction. The ascending triangle in a downtrend, the same consolidation, breakout to the downside most likely, but then again, we could go also to the other side. Descending triangle, exactly the same, right? It could go both directions, but the most likely one is continuing with the trend. So now we are back on the USD Japanese yen monthly chart, right? And let's see if we can find some of those patterns in this chart here. First, let's zoom out. Again, we are here at the monthly level, and let's see if we find some obvious patterns here. If we start here at the left, I think that could be an upwards channel, right? Let's draw a line here. This is the upper trend line, and here we have the lower one. So here coming from a downtrend, we got a rejection below this line and went up and had here several rejections at this top line here, this price levels. We went up and finally broke to the downside, as we can see here, in an upwards channel pattern that breaks through the downside. Let's see if there's something else. Maybe we could draw something here, right? This could be an ascending triangle, right? Getting rejections here, here, Yeah, and having this consolidation phase and breaking down here, going into this pattern. Right, let's see. So we have an ascending triangle, a channel formation here. So this could be a symmetrical triangle here. Right, more or less, which is also here in this case a confirmation pattern, and as it broke here to the downside. Here this could be a descending triangle. Right, as we have lower highs and this resistance level here, right, where we finally broke to the downside. Then again here, another triangle pattern. And this is the monthly. As I mentioned, those chart patterns can be found on any time frame, whether that be the monthly, weekly, daily, hourly, 15-minute, 5-minute chart, it doesn't matter. But let's have a look at the weekly chart, or better, even let's go to the daily chart, and we can see already that we have some patterns here. Yeah, let's zoom out a bit. Well, we have here, for example, we have an uptrend, right? This is here a general uptrend, and this would be a falling channel or falling wedge, depending. Right, we could draw this in and this here in, right? It would be some kind of falling wedge. We can zoom in and even go down to the 4-hourly, to the intra-day frame. Take this here, it up around here. So we see coming from an uptrend, we had this falling wedge, or this downward channel, which eventually here broke to the upside and acted as a confirmation pattern. So after all these wedges and triangles and channels, let's see if we can find trend reversal pattern like a double bottom or a head and shoulders. Let's see if we can find this here. We're on the monthly. Not sure if that's a double bottom. Maybe let's go to the weekly or even daily. And I think that looks like one. Let me zoom in a bit. Well, not quite sure, but let's try it. If we draw in an area here, right? So we would come here from this downtrend, right? Would hit here, bottom, come up, come down, up, and once we break this neckline here, we confirm the trend reversal, right? I think that's a double bottom and that's a trend reversal pattern. So now we are again at the USD yen pair, and I think this looks very much like a triple bottom. Let's have a look. Let's take the rectangle tool, and I think, yeah, that looks like the bottom. So we do have here, if we take the brush, we are coming from a downtrend, right? Have a rejection here, coming back up, coming down, another rejection here, coming back up, another rejection here at the bottom. We will have, well, like this would be the neckline, right? And We broke out here, pulled back, went back up, pulled back down. Probably when we passed this point here, we would have the confirmation of a trend reversal, right? So either here by breaking this neckline, or here by breaking this higher high. I was looking for a head and shoulders pattern, but I had difficulties in finding one. So I went down to the 5-minute charts, well, at least at the USD yen pair, right? So I went down to the 5-minute chart, and I think I found one. It's either I'm really bad at spotting those, or I don't know. So let me know if you can spot some of those head and shoulder patterns in the USD yen pair, and let me know down in the comments below. And I think this one is a head and shoulders pattern, because we do have here, I think that would be here, the left shoulder, the head, right, the right shoulder. So this here would be the neckline. And once we broke that neckline, the trend reversal was confirmed. In this case here, well, to the downside, right? Well, now after having looked at the basic chart patterns, we're going to have a look at basic indicators, and we are going to look at 3 indicators and not much more, maybe in a future video, and we try to keep it as simple as possible. So we're going to have a look at 50 EMA, the RSI, which is the relative strength index, and the Fibonacci retracement levels. Right, so starting with the 50 EMA, what's the 50 EMA? The 50 EMA is an exponential moving average. That means that's the average of the past 50 days closing prices, with the difference that more recent prices have a higher weight in this formula, right? So it's a lagging indicator, which means that it lags behind the price action. And yeah, the 50 EMA is one of the most popular moving averages used by traders. Moving averages, and this is very important, only work if they have been respected in recent time. Then they can be used as 1, a form of support and resistance, and 2, a trend change if price breaks through it. Also very important, it should never be used by its own, but only in combination with other signals as an additional confirmation. Now let's have a look at the chart and see how we can add the 50 EMA indicator. And it's really quite easy. Just go here at the top bar, click on indicators, and type in 50 EMA. And there are a bunch of indicators. Here is 20, 50, 100, and 200 EMA. Let's click on this one, right? And here we can click on some settings, because the only thing that we want is the 50 EMA, which is the yellow one here. So we just leave that and confirm with OK. Now we see here we are at a daily how this works, right? We can see here, for example, we were here basically most of the time below the 50 EMA, and we can see that it was respected here in recent times. It worked as a resistance level right here at the daily, and Here we broke through and it acted as support for quite some time. And here it was trading all over it. And here again, it was respected. Right, we break through here. So this can be used as an additional signal in combination with others. That's the 50 EMA. Now let's have a look at the next indicator. The next indicator is the RSI, which stands for Relative Strength Index. And this indicator is a momentum oscillator that measures the speed and change of price movements. Yeah? The RSI is used to identify overbought and oversold conditions in the market, as well as to generate buy and sell signals. The RSI is displayed as a line that fluctuates between 0 and 100. The indicator is considered overbought when the RSI line is above 70 and oversold when the RSI is below 30. Yeah, the best thing is having a look at the chart. So let's have a look at the RSI indicator. So again, we are going to click on indicators here at the top bar and write RSI. And here at technicals, we have the relative strength index. We just click on it and we are going to have the indicator here at the bottom of the chart. As you can see, it has this price level between 30 and 70, which if it's above 70, as I mentioned, it is overbought, and if it's below 30, it's oversold. Here, if we click on the settings, there's an RSI-based moving average. We can, just for the sake of it, we are going to blend that out, right? And we are going to just have a look at the RSI. The RSI in itself, as I said before, it's just to have a signal if there's an overbought or an oversold market, right? And if we zoom out, we can see here, for example, there was over 80%, 82%, which means it was overbought, and we had shortly after fall in price. Right here, the same, we went. So let's see if we can put everything we've learned so far together and see if we could have traded here a trend reversal in this area here. As we can see that there was a clear downtrend and a trend reversal. So first things first, let's make sure that we are on the monthly, and let's try to draw some support and resistance key areas here near those price levels in. And I think here a key support area would be this line here. So let's just take the rectangle tool. Right, and let's draw this area here in. Why this area? Because in this area we had several rejections, and it acted here as support, here again, here, and here we broke through and it acted as resistance one time, two times with multiple candles here rejecting this level, and it acted again here as support, right? So, and a key support level, let's see if we can find something, if we can make something out. I mean, here, yeah, that looks good. Let's draw this in. Okay, once we have defined key resistance and support levels near of this price, let's zoom in a bit and let's maybe go to the weekly. And we can see here there's a clear downtrend. But if we zoom out, we can draw here this trend line. Maybe zoom even in to get a more granular view on the daily. That looks good. As we can see, we've had already a rejection here to this support level and another one here. So we know this is a very, very strong multi-year support level, a key area. Here we can see that we tested and broke out through this trend line here. So that would be something to look out for. And we had a structure break once we broke out and made a new higher high and a higher low. So that's a first sign. We got rejection from the support, broke through the resistance trend line of this descending triangle, made a higher high, pulled back down, made a higher low, and got back up to make a new higher high, right? So this is a very, very bullish sign. Let's check if we can. Let's check at the 50 EMA, and we can see the 50 EMA here acted as a resistance level, and it was respected as such for quite some time. And we had here this area where we broke out of the 50 EMA and of this falling trend line here. And we see that the 50 EMA acted basically as support. And if we take the Fibonacci retracement tool and we draw the line here at the swing low up to the point where the structure broke and got rejected here, we see that we got a pullback of price inside of the 50 and 61.8 value levels of the Fibonacci retracement tool, and we got a rejection here. So we have here an area of confluence. We have a breakout of both the downwards trend line and the 50 EMA. And we made a higher high, a higher low, and this low happened in the value levels of the Fibonacci retracement areas, and then we made a higher high. So we have several factors that played into this as a multi-year support level that got rejected, a breakout of the 50 EMA and the down trade resistance level, a structure break. We made a new high and a higher low and got a rejection here at this value level and made yet again another high. So this is the area probably after this pullback where we could have entered a trade, I think. If we go even more granular to the 4-hourly, let me see if we can even get there. Yeah, we can. Right, we see here the breakout at the 4-hourly already, a rejection, a higher high, pullback, and yeah. Let's go back to the daily. So as I said, I think that would be a great entry point right around that level. Here, once we broke this new higher high, got rejected here at the 50% retracement level on this value, in this value area. So we could have entered here or probably here, right? So in this area, entered a trade and would have used this resistance level as a take-in profit area, right? Because if we would have entered here at this level and would have used this area as a profit target and would have placed the stop loss, well, maybe just below the 50 EMA and this 61.8 value area. So I think that that would have been a great trade. If we go further to the left, I think that we would have had this area as a resistance as well, right? This one here, and we saw this, so we could go down and use this area as a profit. So we had 1 for 2, I think 1 for 2, right? Risk reward 2, so we would lose 1 in order to get 2, right? With this area here of confluence. Yeah, let me know what you think. And let's go to the next example. Yeah, putting it all together. So let's have a look at our USD yen chart yet again. And yeah, let's see what happened here. Let's make sure we are on a monthly. And yeah, let's see what happened here at this area. And see if we can analyze and have a look at this area here. First things first, let's try to see if we can identify some key support and resistance levels by zooming out, right? So I think here we can identify a key resistance level because we had here a top and here some rejections at the same price level, right? So we can maybe draw in an area like this, I suppose. Let's give it a red color so we know that this is the monthly. And let's see if there's anything else, maybe here, right? So let's draw that in. Something like that, because we had here two rejections. Another one would be around here, right? So we had here, 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 here. So multiple rejections. This was acting as resistance here, as support here, over here. So let's zoom in a bit and see if we can find something more recent, right? So we see that this is a key resistance area. We got rejected over here. And let's go down to the weekly, see if we can see here some obvious support or resistance areas. I think this one here is quite clear, right? Something like that. Let's give it a lighter color so we know that this is the weekly. Right. So let's also turn on our RSI chart and our 50 EMA indicator to get a better overview here over the situation. And what we can see here, let's zoom out a bit. First of all, we are here at the key resistance area, right? This is a multi-year key resistance area. And what we can identify at first glance is we are coming from a very bullish uptrend, right? This is 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive bullish candles, right? And then at this key resistance level, we are having a bearish weekly candle with a long upper wick, which indicates a reaction to this price level here. And the second bearish doji candle here, which is which represents an indecision in the market, fight between bulls and bears, which ended up eventually in a draw. As we can see here, closing price and opening price are basically the same. And yeah, this is where we would have had to pay attention, right? If you're going to zoom out, we can identify a divergence here because we are coming here from an uptrend, and here the RSI chart is going down, right? So this is a clear divergence. So we would know that there's a price correction coming, right? Or price reversal or trend reversal. So we would pay attention, right? So here, bearish candles, right? We had this long wick bearish candle after a 8-9 week consecutive bullish run, right? And we would have to have this bearish candle, this doji candle, and later this bearish engulfing candle, right? So we have a bearish candle pattern. Let's draw this line here at the lower price action as we are here in an uptrend, right? So we are here. Now let's zoom in a bit. Let's go to the daily and see if we can identify some other indicators. So here we see we had a rejection at this price level. We went down, failed to make a higher high, made a lower low, right? But still had the 50 EMA here as a support, if you will, which we break through with a very bearish momentum candle, right? And the next candle is also bearish, where we break through this lower upwards trend line, which acted here as normally, which acts as resistance. We broke right through and got rejected at this support here, went back up, and the lower trend line here acted as resistance. We went back down and broke this support line here. And yeah, this would be I think a short entry, right? You could see this as a short entry point, if I'm not mistaken, even though there are more resistance levels and more support levels, right? Or resistance levels in this case, like around here. We would have another one right around here. Let's make this, we are at the daily, let's make this gray. So even though we have here more resistance coming, right, I think that this is a very heavy trend change. And yeah, even though we are here in an oversold area, which could probably indicate like a rejection, right? Let's see what happens. We have here multiple resistance levels, and so it's probably difficult to break through all of those, but maybe trading from one to another, as we can see here, we already broke basically through this one, right? So let's see what happens, right? The RSI chart is indicating that that we are in an oversold area, so we probably could get a rejection and could trade here sideways, right? Or breakthrough, I don't know, right? That's up for a future video. So let's check this in a future video to see what happens. And yeah, but right now it looks that like a trend reversal confirmation. Well, this is it from me. I hope you enjoyed watching. I certainly enjoyed doing this video. I've learned a lot going through this material. I hope you've learned a thing or two as well. Please, if you enjoyed watching, consider subscribing and liking the video. Feedback, comments, tips are highly appreciated in the comments down below. Thanks for watching and see you in the next video.